What's going on, snipers? I am Stock Sniper Mike, and today we're going to be going over something very important to keep your cash and keep the consistency in the stock market, and that's holding and hoping. Holding and hoping is a pure emotion in the stock market that we want to avoid. One of the number one rules as a stock sniper is to stick to the plan, and when you stick to the sniper plan, you avoid all the emotions. And for most people, when they start to react with the emotions, it doesn't end up well, and the same thing is here in the stock market. Now, we just did a video a couple weeks back on cutting losses and how important it is to cut losses in this game. The stock snipers have over 1,075 losses total, but still able to profit over $250,000 with that 1,075 losses. How do we do that? By cutting losses. So make sure to go check that video out if you have not checked it out a couple weeks back on our YouTube. Because today we're going to be going deeper into that subject of cutting losses, and we're going to be going over holding and hoping. They say there's a statistic out there that 90% of traders that come into the stock market lose, and 10% are the only ones that are able to profit and win. And we want you to be part of that 10%. A lot of being a part of that 10% is finding something that works and continuing to do that over and over and over again. Now, when you do find something that works, the goal is to be able to grab profit or grab the bag, like we like to say, when you have it. Also, you want to have a downside goal, and you want to be able to get out when the stock is coming down and hit the spot that you no longer want to be in the stock. So you have a plan now on the upside and the downside, and you want to stick to that every single time as a day trader. If you forget to stick to that plan, you could end up playing with pure emotions. We like to say the sniper plan is in the dead middle, resistance, support, dead middle, and anything above and below that is emotions. You can even get emotional on the way up. So when you're profiting, for example, and you're making a lot of money, as a sniper, we tell ourselves 15% or more is usually a nice spot to take that bag. And if you wait till past 15% and it continues to go up and up, you unfortunately might end up losing that 15% and more, because the stock could easily come back down. So what happens is, if you don't ever sell and it gets above 15%, you start to get this emotion called greed. And everybody knows about that greedy emotion because everybody wants to be rich or wants something in particular, and then they get greedy about it. And that's what happens here in the stock market as well. If you are up 15% and you decide not to sell, you're usually telling yourself, oh, this stock is going to go to the moon, or it's going to continue to go up forever. And those are things you want to avoid. That's the emotion on the upside. Why you want to avoid that is because if the stock continues to go up, that's a great thing and you're making more money. But if you never decide to sell it, it can come right back down a couple days or even that same day. So it's very important to grab that bag when you have it. Now, the emotions on the downside, and what we're really going to be highlighting today, is the fact that you cannot hold and hope in this game. I believe 90% of traders get eliminated from this game because they don't know how to cut their losses and stick to the plan on the downside. In this game, when the stock comes down and you have to cut your losses, you have to do two of the worst things that all human beings don't like to do. Number one, you have to admit that you're wrong and get out there. No one likes to admit that they're wrong in anything that they do for the most part. And with this, what's even worse is number two, once you admit you're wrong, you have to face the fact that you're actually going to lose money being wrong. So cutting your losses, yes, you still will lose money, but you won't lose as much as when you're holding and hoping. If you let the stock drop below your cut spot, that becomes the emotion holding and hoping. And what happens is, every human being has this emotion, so don't be upset if you think you're the only one going through this. Every single trader goes through these kind of things. It's all about how you react to it. So if the stock drops below your cut spot and you are now holding on to it, a lot of humans will tell themselves this is going to come back. And that is one of the worst things to say in the stock market. I believe the 90% of the people that do lose tell themselves that this stock is going to come back, and they don't want to admit they're wrong. But if you're able to face the fact and admit that you are wrong and cut your losses like we did 1,075 times on our journey, you'll be able to find consistency in the stock market. Here's a quick example of how we were holding and hoping just a month back. So just like I said, no matter who you are, you could be the best trader ever. This emotion is still going to happen to you. And it happened to us not too long ago with the stock GWSO. If you check out GWSO, it was able to spike all the way to multi-month highs of 874 and 880s were that high area. We decided to buy it looking for that overnight multi-month swing, and it collapsed on us the next day. Our plan was to get out at $8, and the stock came right down to $8 right away the next day. We should have got out, and if we cut our losses there, we would have only lost $600. Still a lot, but not as much as what we really did lose. We ended up telling ourselves that the stock is going to come back because we did see it touch 870s the day before. We said, hey, we saw it in the 870s. We were actually up $200 when it was up there in the 870s. We can see this coming back. We were just up on this stock. Why are we down? We shouldn't be down. Let's let this thing come back. And those are the bad thoughts that start to go into your head when you are holding and hoping. And now when the stock doesn't bounce and then it falls for the next day, you start to tell yourself, oh, I'm going to cut it here. If this happens, I'll make sure to cut it here. Our idea was to cut it at 7 if it did come down to that spot, and then the emotions took over. We held for another couple of days because it never dropped below 7, holding and hoping it's going to bounce back up to the $8. It never ended up bouncing back up, and it actually collapsed below 7. So now we broke 2 support levels that we said we were going to cut our losses at, and we're still holding and hoping. So a lot of people don't realize that if you don't cut your losses at that first exact time, you could end up in a full whirlwind of surprises and unfortunate drops. And that's what happened here. GWSO never saw the volume and never got the bounce ever. And we had to admit that we were wrong finally 2 weeks later after bag holding the stock and holding and hoping, taking one of our biggest losses to this date and right around $2,000 because we let that emotion of holding and hoping take over us. If we did get out when we wanted to at that $8 spot, we actually would have lost $600. So it's important to not hold and hope and stick to that sniper plan if you're looking for consistency in the stock market. Hopefully you guys enjoyed this tip. It's one of the few emotions that you'll run into when you're dealing with stocks and in the stock market, and especially as a day trader. But it's important, like I said, to stick to what you know works for you and repeat that over and over again. Hopefully you guys enjoyed, and hopefully you guys can benefit, and hopefully none of you hold and hope after this video. Stock Sniper Mike, out.